up, guys? It is BGFX coming back to y'all with another brand new video, man. Salute to all y'all who are watching. I know it's been a little minute since I posted here on the YouTube channel, but welcome back. It's good to see y'all again. In today's video, I'm just going to be walking y'all through some trades that we took not last week, but the week before last. So I have a lot of catching up to do with y'all. Took a lot of trades these last couple of weeks, and I'm pretty much just going to be walking y'all through them. Walking y'all through my thought process, as usual, why I'm looking into these trades, how I went about entering them, and things of that nature. So start things off, it is currently November 2nd, 2020, man. It's 5:44 p.m. Pretty much evening time right now. We just had Halloween pass, so it is getting dark. It's getting dark a little bit earlier over here in Louisiana. But yeah, man, let's go ahead and get into this video. We have the election. It is election week. Have the election tomorrow. Definitely has brought a lot of volatility into the market, a lot of volume, a lot of a lot of liquidity, things of that nature. So definitely good to understand what type of uncertainty the election brought. In my opinion, I've had a couple people ask me if I was trading the election or if I advised trading the election. Not something you want to do, man. Like, definitely, the election tends to not really respect stop losses, things of that nature. A lot of unpredictable moves, so definitely be careful, definitely be mindful of trading this week. I think a lot of people are going to flip accounts this week. A lot of people are going to blow accounts this week. That just comes with volatility. Volatility brings opportunity, but you definitely want to be very, very smart about it. Okay, definitely be smart, manage risks, and enter at your own risk. So I'm gonna go ahead and take you guys to the VIP chat. So October 19th, right? That's when I'm gonna start this off. I actually have my eyes on JPY longs. So good morning, everybody. Let's have a great week. I have my eyes on some GJ longs into 137. Excuse me, 137 last night before London, but it didn't pull back enough for entry. Here was the markup. So this is pretty much what I was looking at here on GBP/JPY. And I was definitely looking for an extension right here up to 137.00, which was a psychological price area. And I'm going to go ahead and go on the charts, and we'll kind of get a little bit more in depth as to why I was looking to go ahead and go long right here. So if we go ahead and we look at the overall structure, let me go ahead and take this eraser off. You can see that overall, we kind of made somewhat, not necessarily equal highs, somewhat of almost a double top, and then we pushed all the way down into new lows in the market. So we started to create a somewhat bearish environment. Now, something I want to do here is I want to translate the way you see the market from support resistance, trend line, EMA crossover, Fibonacci breakout, into here is where a lot of orders are residing at. Here's where the liquidity resides. Here's where price will potentially target, right? Understand that a lot of this for the short term is based off of liquidity, fake outs, manipulation, and the market driving in one direction due to a particular reason, right? So what I wanted to do here is I drew this trend line out, and this trend line was showing us that, the overall flow was to the downside, and we were going to have a lot of retail orders residing in this area. Now, I'm not saying everyone was selling. I know a couple people who actually went long on GJ. The same time I was looking to go long on it. But for the most part, you can see that what the books teach you, right, is that prices on this trend line, maybe you get a little bit of reaction, and then from that point, you could sell on a pullback. Something like that is what a lot of the books teach you, which means a lot of liquidity resides near the zone. Even as retail traders, I forgot what the statistic was, that retail trading only, makes up a certain amount of the capital flowing in and out of the market over a certain period of time. But when so many retail traders are building up, they equal a large amount of liquidity that could definitely be targeted. So that's what we were looking to target. So going ahead and looking at what price was doing, we see October 13th and made this final, push, and then we ended up, impulse correction, another impulse to the downside, and we made somewhat of equal lows. I'm not really going to call this equal lows because we did have, a little bit of consolidation, a little bit spikes below, and then we pushed back up. So something I realized is you can go ahead and draw this little small zone out of equal highs being made in the market, and you can see that this descending trend line was in confluence with the fact that price was touching the equal highs as well. So I was looking for price to come up and go ahead and tag some of this liquidity, not only residing above here, but as well as above this previous high of this double top as well, because anyone looking to trade over the long term, right, we can go ahead and measure this. This was around a 70-80 pip stop loss which would be valid for anyone trading this trend line to have their stops above that high, with targets to be around here. Because if we're looking to the left, so much free traffic, right? People would probably look to go ahead and catch that move to the downside. So like I said, not everyone's selling this trend line here, right? Everyone has their different approaches, but a lot of liquidity was here. Definitely, just thinking logically, a lot of people were probably looking to short. And what I wanted to see happen here was a bit of a pullback, somewhat, within this zone. So I like to use Fibonacci a lot. To this day, definitely something that I really enjoy using. And I was looking to enter, I believe, somewhere right around here, and then my stop loss was right below this low. And you can see that market opened up on Sunday. We gapped down. We instantly filled that gap, kind of ranged here a little bit, and then we just took off. If we go to the sessions, you can see that we took off, right as Asia began to come to a close, right? So if you go to sessions, I have my Asia, which is gray, and then I have my London, which is purple. So you can see, like, as we opened up in the London, a good bit more volume came through, and that pushed us up above those highs, and it hit that liquidity above this area as well. So I was looking to go ahead and go long right here. Like I said, unfortunately, we didn't get the pullback I wanted to see, and that would have been somewhat of like a 100 pip gain on this trade with a 27 pip risk. So that would have been like a 1 to 3.55. Like I said, keeping it transparent, didn't get the entry on this one. So let's see what we have next if we go ahead and we come here to the VIP, right? Played out great, but didn't pull back for us. Looking at a few setups right now. Might be entering something here during New York session today. I'll keep y'all updated. So next is going to be NZD/USD. This is some shorts that we actually took here, and as you guys can see, 3.5 pip risk for a 19.5 pip reward. Of course, risking 1 to 2% at all times. You always want to keep that risk low. No reason to be approaching the markets risking 20-30% per trade. That's just definitely, that's the short-term game. You want to be playing a long-term game. You definitely want to be looking to build wealth, right? Grow into substantial numbers. So 1 to 5.54 risk to reward. Let's see if NZD/USD drops off here. Low risk, large reward. If it continues up, that's fine. I'll look for some re-entries later. So to go ahead and look at the markup, this is what we had, and then boom, automatically has some reaction. Decent amount of pips. Monday had 2 sell positions kind of near each other here on a 1 minute time frame, and then I made NZD/USD risk free. So let's go ahead and go to the charts really quick, take y'all back here, and you can see that eventually we played out. Unfortunately, I made my trade risk free. I know it's looking pretty dark right here, by the way, but once I go back to the charts, it'll light up again. But yeah, I made my trade risk free. Right, I made my trade risk free once we broke into these new lows. I mitigated my risk, and price ended up coming back and taking me out at break even before seeing that further extension to the downside to hit those final targets at a 1 to 5.54 risk to reward. So unfortunately, I did get hit out at break even. But when it comes to the signals, I just make sure to let everyone know what I'm doing. If they don't really feel comfortable moving that stops to break even, they don't have to. But things like that, definitely come with what you think is best for your personality. Our original stop loss placement was held up. It was held up, but if you'd have brought stops to break even, you'd have probably been hit out at break even on that. So update, if you stayed in NZD/USD through that pullback, all targets were hit. I got out at break even. It looks like 38% of people said they caught the move. So let's go ahead and get into a little bit analysis here, right? So looking at NZD/USD, I was looking at this on the 1 hour time frame to start things off. And you can see that we had somewhat of equal highs being made here. So back to what I was talking about, looking at the market from who's entering where are these orders going, and you should overall kind of be able to understand where order flow is going just by looking at a chart. You don't really need any data for that. Of course, if you want accurate stuff, you can be looking at COT data, COT data, and stuff like that to understand what traders are going net short, net long. But that's for a whole nother video. But right here, you can see that we were kind of making these equal highs and building a sense of liquidity in the markets. And then what we actually did here was we went ahead, kind of consolidated. We came up near this level, and then we came back to the downside. So that's a pattern you'll see very often in the markets. Overall, you'll see something like this. You'll see those equal highs, equal lows, maybe a little bit back and forth movement, and then you'll see price come up, tag this area, come back down, come for the pullback, and then you'll see the continuation in the opposite direction. So that's kind of what we had going on here. Let's go ahead and clear this off the screen, and then what I did was I actually drew out this area of supply in the markets, and we were coming up to go ahead and retest this zone. So once we came up into this area, this is a 1 hour time frame. So what I did was I worked my way down to the 15, and I was looking for some type of pattern to occur that would actually trigger me into the setup. So I was looking at something like, the 5 minute, 3 minute, maybe even the 15 minute. But what we see here, right, is that we had somewhat of a head and shoulders pattern with the low being broken. So what I did here was I just took Fibonacci from the high to the low, and as you can see, perfect entry at the 618, and we pretty much immediately rejected. And this is the lower time frame, so this is actually only 8 pips. But once again, everything is percentages, risk to reward, things like that. And then we came back up and kind of pushed up a little bit more here. But fortunately, like I said, our stop loss did have a little bit breathing room here, and we were able to kind of withstand that movement, right? So going back up to the higher time frame real quick, back to the hourly. The theory with this, right, is that when price makes a strong move to the downside, right, you see how we had this very strong push to the downside. The theory is that orders are going to be in both directions, right? Before you have that strong move, some people believe that price is going to go up, some people believe that price is going to go down, right? When these orders are accumulating, we know that only one person could be right, unless we have something like this, unless price consolidating and you kind of whipsaw back and forth, that'll kind of change up the order flow. But if you see something like this and then it drops off, you'll know that there was of course buyers and also sellers in this environment, right? As humans, we all have different opinions, and the market is kind of somewhat of a response to our decision making, right? Our fear, our indecision, kind of what we do kind of drives the way things like to move, especially in the Forex market, because the Forex market is manipulated, right? There's someone here trying to plot the move against what most people are doing. So we're coming up into the zone, right? And I want you guys to look. I'll go ahead and get my little arrow tool out. I want you guys to look at how we kind of made a small retracement, we dropped off, made another small retracement, and then we dropped off even stronger, and we took out all these previous lows. You could go ahead and say 1, 2, 3, and somewhat 4 little miniature zones we took out with the strong move to the downside. So what I did was I actually boxed out the rally of price. I boxed out the small bullish rally, okay? Small retracement of 9 pips before that move to the downside. So what this told me is this potential area of supply, right? Some people would have bought here, right, through this little area. Some people would have sold here. The theory is that for anyone selling, by the time price comes back up into here, they're going to have their stop loss to break even, right? Originally speaking of what they had originally wanted to do, their stop loss was up here. Price pushes down, they move their stops down, so the market chases that mitigation to take the stops out before moving in the opposite direction, right? Pretty simple. I hope you guys kind of catching what I'm pitching here. Once price comes back up, it's mitigating the orders. Okay, it's mitigating the orders, and what the market does is, as a response, it goes back in the direction it was intending to go. So that's all I was doing. I drew out my small rally or price pullback, whatever you want to call it, after this little grab of liquidity, right? After the spring to the upside, which was right after the equal highs were made, kind of build up the liquidity, and then we retraced into this area, and then I looked for the confirmation to go ahead and go short, and of course send it out to my students as well. So yeah, my entry was, like I said, I believe right here at the tip of this wick, and then stop loss was a little bit above this high, I believe, and then I can go ahead and go back to the group chat to go ahead and see. Take profit was 0.66243. 0.66243. Wait, let me go ahead and go back here real quick. Okay, entry was right there, 0.66465. Okay, perfect. 1 to 5.34 risk to reward, 1 to 5.44. So it's a little bit different. That's just because I marked it up a little bit differently. But as you guys can see, played out very quick. And of course, we took our first entry, and I'll go ahead and let it play out in real time just so you guys can see kind of what we were seeing here. But we're triggering in, we started pushing down, right? So once we got to this area, took the risk out of the markets. We were a fairly decent amount, pretty much double our risk was made back. So at that point, it's pretty safe to say, go ahead and move stops to break even. Unfortunately, we had this happen. So there's benefits and drawbacks to every approach you take. If you decide to move your stops to break even pretty early, something like this can happen. If you don't, you kind of you're kind of pushing the chance of you possibly having a losing trade as well. So I feel like a good balance of trade management is definitely something that you want to have, as a trader. So that's what we have going on there. NZD USD would have either been a break even, or if you would have held through that initial pullback, you'd have been fine. You could have targeted the final area for a 1 to 5 plus risk to reward. So let's see what we have next. GPJPY idea. Gold being on the trend line brings high demand to the metal for buy orders. As a result, we may see a stop hunt. Since JPY and gold are correlated, that stop hunt will give us a discounted entry for a push upwards near the zone I drew. For the GBP, covered cases are rising, plus no Brexit deal equals possible weakness for the currency. Timing is everything. We let the GBP begin bullish as expected, and now forecasting a move to the downside. Final targets will be 135.90. So just like I was talking about at the beginning of the video with the GPJPY trade, where we had the trend line targeting the orders above that trend line. Wanted to see the week start off bullish, right, and then following through with the fundamentals, right, Brexit, because a lot of times Brexit, the news is the same. It's usually very negative, nothing really solved. So that's very predictable. So usually we'll see the market follow through, with what it has to do. Then the from economic standpoint, you'll see the market kind of flow in the direction it needs to go. So this is what we had going on. GPJPY idea, little markup, looking for a push up to 136.930, and then a move back down to this low, which is kind of near the area where we actually had that market open up, where we gapped up on Sunday, gap down on Sunday. I'm sorry. So that's what we had next. Actually went to sleep and set a limit order, right? I didn't end up staying through for London session here like I usually would, because I was trading USD session more recently, right? And we ended up pushing up to this area. Limit orders were hit, ended up waking up around 30 pips in the profit, secured a little bit, stops to break even, and then we ended up going back up into somewhat of a break-even trade. And you guys can see right here, all we had to do, right, is to go ahead and start this from the hourly time frame. You can see that we were somewhat still, around these equal highs after this move took place. Let's see. After this move took place up to our area, definitely was looking to see, that economic influence come into play, after the order flow standpoint of price stopping everyone out, above those previous highs. So from here, if we were to go down back to the 15-minute, it looks like I'm gonna have to speed this video up though, by the way, because my battery is getting low once again. So Fibonacci, right, from this high to this low, you can see that we are around here, around the 786 area. And then if we come over here to the 5-minute time frame, you can see that we overall pushed off this level very strong, made those new highs, and this was actually very simple. Nothing too crazy going on here. This was more fundamental, right? Looking to see that GBP weakness come through compared to the JPY, which would potentially cause the pair to move down. Now, I don't believe my entry was right here on the 76. I think we're a little bit lower. We'd have to go back over here and check really quick. 136.930. So that was right around here. And if we go ahead and press play, see that we played out a fair enough to get our risk out of the markets, right? Our overall exposure, if we go ahead and measure this out, that was around 40 plus pips, it looks like. And final targets, I'd have to go back really quick. We can see what final target, 135.90. Right, so that's where we were, right, -618, meeting up with these equal lows, right, where we gapped down. So that's kind of what we had going on here. From this point, you could just go ahead and move stop loss to break even, mitigate your risk, get your risk out of the markets, just let the market do what it needs to do. And then of course you had these equal lows. You could have been looking to target below as well, depending on how things go. So next is going to be gold, right, XAU USD. This was a losing trade. Gold was a losing trade. If we go ahead and we look right here, this is my markup before, boom, this is my markup after. A few people said they were still in it, so I went ahead and wrote, if we do not close above this, you can still hold a solid risk to reward ratio. If we close above here, stop loss in the 15-minute, cut the loss quickly at 30 to 40 pips. Pretty self-explanatory trade here. Kind of kept this one simple. We had this previous high, sprung above that high, broke the low. Once again, look to enter right here with a little bit confirmation. Even looking at something on the 3-minute, you can realize we started to see that reaction. And I believe we did go, a decent amount in profits? Let's see. Not really. Doesn't really look like we went too much in profits there, but that was an L on gold. Like I said, keeping the risk very, very small, right? And then the final trade of the week, this was a very, very clean trade, man, on GBP JPY. Took some shorts here to end the week off. Like I said, we looked at this initial short, played out, like I said, secured a little bit of profits on it. And then we ended up extending back to the upside. So my bias was still to see that, reaction, to go ahead and see that reversal on GJ, but we just had to wait for the perfect opportunity, and the perfect opportunity did arise October 21st, 7:04 p.m. Asia session. I did send this out as a GBP JPY idea. Definitely a very, very clean trade setup, man. So you can go ahead and look at this structure very closely. And if you press play, this is actually our entry. You cannot see anything right here, but yeah. So look, we sold, and then there it is, a little bit of structure following through just as anticipated, and then we flow all the way to the downside, breaking below this trend line at 136.686. Very, very clean trade setup. So let's go ahead and go here, and I'll go ahead and walk y'all through why I actually want to enter this. So going ahead and looking at where we were, you can go ahead and box off this area as a potential area of supply once again on GJ. And just real quick to put one thing out there, there's two ways the market could respond to equal highs, or should I say three ways the market could respond to equal highs. The market can go ahead and do something like this, which is one of the most common things known, which is called make a double top. Some people call it M formation. I trade M's and W's like a lot, as a real big part of my trading, but not in this case. I have different variations of M's and W's. But the first circumstance is price simply making a double top. Like I said, first circumstance is price simply making a double top. Second circumstance is price going ahead and doing something like this, breaking above that high, kind of grabbing that liquidity, inducing buy orders, taking out those sellers, hitting their stop losses, and then coming back down, pulling back into this area, then reversing. And then you also have your supply and demand, right, where we fail to come up and make a new high. So I want you guys to just look at the charts and realize how many times price will do something like this and fail to hit this area and reject before even tagging any orders around that level. So that's something you'll see a lot. So we did have some potential supply here, and you're looking for fresh areas, right? When you're talking about support resistance, you're talking about something that's constantly retested. So there's liquidity above here, liquidity below here. You're talking about the trend line as well. People flowing through with the markets. Supply and demand is a little bit different. They're more fresh. There's something that shows up a little more recent, right, that price tends to react to. So once you get the hang of it, it's definitely something that is very, very powerful. So this is what we have here. We have our little formation, M formation. From this point, you can see that we did have that consolidation, and we pushed up above these highs where we were looking to sell, right? We had to sell off about 40 plus pips before coming back up. And from here, we begin to meet up with this level. And my bias is that we were not going to make equal highs, right? What is above these equal highs, right? People looking along, and also people looking to sell with their stop loss near the same spot that people are looking along, right? So instead of us pushing up to grab that liquidity, I was just looking to see a simple reaction off of potential supply here on GJ. And if we go ahead and look at the time, you can see that we for the most part consolidated through Asia session. That's something you'll see a lot. Asia tends to like to set up the move. It likes to kind of induce a certain, particular way of trading, and then once London comes, you'll kind of have that breakout in one direction, and then from there, sometimes it'll continue into New York, sometimes it'll reverse once New York comes around. So that's what we have going on here. And if we go ahead and see, you can go ahead and take Fibonacci right from the high right here of this body all the way down to this low, and you can see that we rejected off the 786. So if I go ahead and I come right here, you guys can see that I sold at 137.545 with a 15 pip stop loss and an 86 pip potential reward, which is a 1 to 5.58 risk to reward ratio, which was beautiful, and we went straight through to take profits. And we also had GBP speeches tonight. And like I said, Brexit deal has been the same for a minute. Didn't really think we were going to have too much strength. Like I said, usually negative news, which would drive this currency to move more to the downside. So it's good to kind of mix up a little bit of everything, a little bit of technicals, a little bit of liquidity, understanding what orders are going where, supply and demand, as well as economic factors. So that's what we have going on here, and I entered, let me go back to check the exact entry, 137.545, 1.5, and then if we go ahead and we come down here, I believe stop loss was around 7 pips, and then I also believe if we come back, 86 pips. Oh no, stop loss was around 15 pips, guys. Stop loss was around 15 pips, and then this was around 80 plus pips. Now for our targets, right? Going ahead and looking at where we're looking to target. Okay, I'm getting another notification about my battery, but I went ahead and I drew this trend line. I wanted to target anyone looking to buy on this trend line. So once again, changing your perception. A lot of people talk about institutional trading. It's not just, you know, institutional understanding, but it's a mindset of what people are doing compared to what the market is going to do, and how you are going to take advantage of it, right? A lot of this is psychological. So that's where we were looking to target. I was looking to target orders below this trend line because I don't know what price is going to do around this level. I don't know if we're going to make equal highs or not. But when we're talking about the retail mindset, we know a lot of people are going to be looking to buy here, which means what happens below. We're going to have that liquidity, right? Especially below these equal lows here, as well as 30, 40 pips below the trend line, relative to what your average daily range is as well, which is a good thing too. Realize. So that's what we had going on there. Entry was right here, and then another thing you could do, what I did is I went to bars pattern right here. I took it from the low all the way up to my highest point, came over here and flipped it, right, just like this. Wait, yep, mirrored. I actually didn't flip this one, I just mirrored it. So I went ahead and I put this right here, and what this allowed me to do is allow me to kind of forecast price with each individual candle, and I was able to react. So what this was telling me is that for the most part, market is going to tank, we're going to slow down a little bit, then we're going to consolidate. So from this level, I'm just going to react to what the market does, you know. So if we go ahead and we press play, absolutely tanked. Let's go ahead and get this off. Absolutely tanked to the downside. Showed a little bit of reaction. Once again, understand how, you know, as a whole, it began to react a little bit. You know, retail traders can move the markets, you know, not that much, but they do have the power to move the markets, especially if they are all entering that same order. They can be a driving force in a particular direction before the market corrects over that, right? So beginning to push to the downside a little bit, and then boom, final targets were hit right here. Just like that. Beautiful. And then I want you guys to look at how we had our formation and the candle repattern connected here with the downside move. See the double bottom / W right here. Then we consolidated. And from that drop, that allowed me to just kind of keep monitoring price. And if we go ahead and come back to here, waited for small push to the upside. Little app I use, Stenu, if you're looking to calculate your risk. Made my GJ trade risk free, right? Very early made this trade risk free, and I got out at break even, unfortunately. But a lot of people in the chat caught it, which was definitely great. Maybe still in GJ targets will be hit very soon, most likely. Doing some analysis right now. Gonna look to into something else, and as you guys see, this was after. Really quick, one more run through. Before, a little bit more, and then after. So perfect, 100% transparency. And then we have a new week, and I'm going to be walking y'all through this next week in the next video that I record, man. So I hope y'all enjoyed this video. Hope you guys got some value out of it. If you are watching up to this point, make sure to hit that like button. Make sure to hit the subscribe button, as well as comment any feedback that you do have. Thank you guys so much for watching. I'll catch y'all in the next one. Make sure to have a blessed day. I'm out. Salute.